Yeah, man, hey. Hi, my name is Michael from Jamaica. Check it out, man. Today, I would like to introduce you to 3 ETFs that could enrich your depot separately or in combination. If you are interested in the topic, then stay with it. Here we go. Yeah, man. In the first video, I familiarized you with the topic of ETF, exchange traded fund, in general, and what needs to be considered when trading ETF in general. But today, I would like to introduce you to 3 ETFs with particularly strong dividend stocks. Listen now. The first ETF that I would like to introduce you to is the Vanguard FTSE All World High Dividend Yield ETF. The All World High Dividend ETF Vanguard lists over 1,600 shares. Even for an ETF, this is an extremely wide spread of companies. Companies like Johnson & Johnson, Roche Holding, Samsung Electronics, and Nestle are just a few heavyweights of the economic big players that this ETF includes. 50% of these shares are shares with the highest dividends. That makes this ETF profitable. The earnings growth is really not that bad, at 5.9%. This ensures additional security in times of crisis. To sum up, you can hardly go wrong with this prominent collection of high-performing companies. Incidentally, this Vanguard ETF also has a savings plan for continuous wealth accumulation. Now, we can come to the second ETF of today's video. That is the SPDR S&P US Dividend Aristocrats. Contains 110 the classic dividend aristocrats from the US index S&P. But first, let's clarify the question. What is a dividend aristocrat anyway? You see, to receive the title of a dividend aristocrat in the United States, companies must have increased their dividend payout for at least 25 years in a row. Dividend aristocrats are high-quality companies. Otherwise, they would not have a long dividend history. A company is unable to pay steadily increasing dividends for 25 years if it does not have a stable business model and a competitive advantage. Here's a quick look at the return trend. Check it out, man. Based on this fact, I can only consider every company that has earned this title with the greatest respect. I don't have to say much about this ETF. In its history, the S&P has always been able to generate new all-time highs. Anyone who believes in the enormous economic power of the USA is in good hands with this ETF. The third ETF is the iShare Emerging Market Dividend ETF with 99 companies. It focuses on companies from emerging markets with the highest dividend yields. This ETF includes emerging markets such as China, Brazil, and India. And as of July 24, 2020, the distributed yield was 6.63%. This is absolutely remarkable, man. Here you can see the geographical breakdown with the ETF. China, Russia, and South Africa are listed as the most prominent and make up about half. Emerging markets such as China, India, Brazil, and Russia have rapidly growing populations. This means that the potential markets of the future are located in these countries. Incidentally, this fact opens up an ideal combination. You see, you can combine the first name ETF, the Vanguard All World ETF, with the iShares Emerging ETF markets. This offers you an ideal combination of industrialized countries with attractive dividend companies and strong dividend companies from emerging countries. Finally, an important note. The worldwide stock market crash caused by the COVID-19 has also led to cuts or even temporary deletions of dividend at some well-known companies. So, before you decide to invest, make sure that the framework conditions still apply. In principle, I can only repeat what I said in the previous video. The longer your investment horizon, the less the impact of such crashes on your ETF investment. And at the moment, you are still practically in the midst of an economic impact of COVID. That means who now wants to invest long term, example using a savings plan in an ETF, can't do much wrong. After all, it can only get better in the long run. At least that teaches us a long history of exchange trading. If this video has brought you any intellectual added value, please leave a comment. We are also happy to answer any criticisms or suggestions, man. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence. Yeah, man.